Welcome back to the Daily Crypto Deep Dive. Today, we are talking about something that sounds boring at first, but could end up deciding the next major phase of crypto: the Clarity Act. And before anyone switches off because they hear the word regulation, this is not just some political story buried in Washington. This matters for Bitcoin. It matters for XRP. It matters for Ethereum. It matters for Solana. It matters for exchanges. It matters for DeFi. It matters for stablecoins. And most importantly, it matters for whether serious institutional money can come into this market with confidence. Because right now, the crypto market is weak. Bitcoin is around the $62,000 area. Ethereum is trading around the $1,600 area. XRP is around $1.10. Solana has dropped back below $70. Traders are nervous. Liquidations have hit the market. People are asking whether Bitcoin has found support, or whether there is another flush coming. And in that kind of market, regulation matters even more. When prices are flying, nobody cares about legal structure. Everyone just looks at green candles and assumes the future has already arrived. But when prices are falling, investors start asking harder questions. Who regulates this? What is a commodity? What is a security? Can exchanges list tokens without being attacked later? Can DeFi survive in its current form? Can stablecoins offer rewards? Can developers build without being treated like financial criminals? Can institutions come in without stepping into a legal minefield? That is why the Clarity Act matters. Before we get into it, quick mention for Kraken. If you are looking to buy Bitcoin, XRP, Ethereum, Solana, or you are just building your crypto position over time, check out Kraken through the link in the description. Kraken is one of the most established crypto platforms out there, and if you use our link, it helps support the show, helps keep Crypto News Today going, and helps us keep doing giveaways for the community. And remember, we are giving 20 XRP to anyone who signs up using our link. Just drop us a message once it's done. As always, this is not financial advice. Do your own research. Never invest more than you can afford to lose. But if you are going to use Kraken anyway, use the link in the description and support the show. Right, let's get into it. The Clarity Act is basically an attempt to give the United States a proper rulebook for digital assets. For years, crypto has lived in this strange gray zone. The industry has grown into a multi-trillion-dollar market, but the rules have often been unclear, inconsistent, or decided through enforcement after the fact. That is a huge problem. Imagine trying to build a business where you do not know which regulator controls your product. Imagine trying to list a token where one agency might treat it as a commodity, another agency might treat it as a security, and a court might later decide something different again. Imagine being a developer building open-source software and wondering whether you could be blamed for how someone else uses it. That uncertainty is not just annoying. It slows everything down. It makes exchanges more cautious. It makes banks more hesitant. It makes asset managers slower to launch products. It makes venture capital less aggressive. It makes developers wonder whether building in the United States is worth the risk. And for normal investors, it creates confusion. This is why crypto has been asking for clarity for years. But the problem is that everyone wants clarity until the details arrive. Because once you actually write the rulebook, every part of the industry starts fighting over the fine print. That is what is happening now. The first major issue is who gets control, the SEC or the CFTC. This is one of the biggest battles in American crypto regulation. The SEC has traditionally focused on securities. The CFTC focuses more on commodities and derivatives. Bitcoin is widely treated as a commodity, but many other tokens sit in a much murkier zone. The Clarity Act is important because it tries to draw clearer lines between digital commodities and digital securities. That could be massive for the industry. If a token is clearly treated as a commodity, it may be easier for exchanges to list it, easier for institutions to trade it, and easier for the market to understand the rules around it. If a token is treated as a security, then it faces a much heavier regulatory framework. This matters directly for altcoins. Bitcoin already has the cleanest regulatory position. That is one reason institutions have been more comfortable with Bitcoin ETFs. But altcoins have always had more legal uncertainty. That uncertainty affects XRP, Ethereum, Solana, and almost every major token outside Bitcoin. For XRP holders, this is especially important because XRP has already been through years of legal drama. So when people talk about market structure regulation, XRP is not just watching from the sidelines. XRP is one of the clearest examples of why the old approach created so much confusion. The second big issue is DeFi. This is probably one of the most difficult parts of the whole bill. DeFi is supposed to be decentralized. No central company, no bank-style middleman, no single person controlling everything. But regulators look at some DeFi platforms and ask a very simple question. Is this really decentralized? Or is there still a team, company, front-end, governance group, or revenue model behind it? That question matters because if a DeFi platform is not considered truly decentralized, it could be regulated more like a financial institution. That would be a huge change. Supporters of tougher rules will say this is necessary because DeFi can be used for money laundering, hacks, scams, sanctions evasion, and dangerous leverage. They will argue that if a platform looks and acts like a financial service, it should have obligations. But the crypto industry sees the risk on the other side. If the rules are too broad, developers could become afraid to build. Open source software could be chilled. Small teams could be crushed by compliance costs. Innovation could move offshore. That is the balance lawmakers are trying to strike. Protect users without killing the technology. Stop criminals without turning every developer into a regulated bank. That sounds simple, but in practice, it is extremely difficult. The third big issue is stablecoin yield. This is one of the most politically sensitive parts of the debate because it brings crypto into direct conflict with banks. Stablecoins are already one of the strongest real-world use cases in crypto. People use them for trading, payments, settlement, cross-border transfers, and moving dollars around blockchain networks. But the moment stablecoins start offering rewards or yield, banks get nervous. Why? Because if people can hold digital dollars and earn attractive rewards outside the banking system, that could pull deposits away from traditional banks. Banks do not want that. Regulators do not want a shadow banking system growing too fast. Crypto companies, on the other hand, argue that rewards and incentives are part of how digital networks grow. So the question becomes, should stablecoin platforms be allowed to offer yield? Should rewards only be allowed for actual usage, not idle balances? Should stablecoins behave more like payments technology or more like bank deposits? This matters because stablecoins are not a side story anymore. They may become the bridge between crypto and the mainstream financial system. If the rules are too tight, stablecoin innovation slows down. If the rules are too loose, regulators worry about deposit flight, consumer risk, and financial stability. Again, this is why the Clarity Act is so important. The fourth issue is political. And this may be the hardest one to solve because it is not just about crypto mechanics. It is about trust. There are concerns in Washington around political figures and their crypto ties. Some lawmakers want stronger ethics rules before they support the legislation. Others worry that adding too many political restrictions could slow the bill down or turn it into another partisan fight. That is a serious problem because crypto needs bipartisan support. If digital asset regulation becomes purely Republican or purely Democrat, it becomes unstable. The industry does not just need a law. It needs a law that can survive future elections, future administrations, and future political fights. That is why timing matters. The Senate does not have unlimited time. Congress has a summer break coming. Then attention moves toward the midterm election season. And once politicians are deep into campaign mode, passing complicated crypto legislation becomes much harder. So the Clarity Act is not just facing a policy test, it is facing a timing test. And markets understand that. This is why regulation can become a market catalyst. If the bill moves forward, the market may read that as a positive signal. Not because every detail will be perfect, but because institutions hate uncertainty. Asset managers, banks, exchanges, payment companies, and public companies all prefer imperfect rules over no rules at all. Clear rules make it easier to launch products, easier to allocate capital, easier to custody assets, easier to build platforms, easier to explain risk to compliance departments. That is the part retail investors often underestimate. Big institutions do not just ask, "Do we like Bitcoin?" They ask, "Can we legally hold it? Can we custody it? Can we offer it to clients? What disclosures are required? Which regulator supervises it? What happens if the classification changes? What happens if a platform fails?" If those questions do not have clear answers, money stays cautious. That is why the Clarity Act matters even if you never read the bill. It helps decide whether crypto remains a volatile outsider market or becomes a properly integrated part of global finance. Now, this does not mean regulation automatically makes prices go up. That would be too simple. Regulation can help, but it can also hurt. If the final bill is too restrictive, it could pressure DeFi, stablecoin rewards, token listings, and smaller crypto businesses. If it is too weak, regulators and traditional finance may not trust it. If it gets delayed, uncertainty remains. If it becomes political theater, the market may lose confidence. So the best outcome is not just any bill. The best outcome is a bill that gives serious clarity without crushing innovation. That is the narrow path. And for the market right now, this comes at a crucial time. Bitcoin is under pressure. Ethereum is dealing with its own questions. XRP is trying to balance weak price action with stronger institutional inflows. Solana is trying to prove real adoption matters more than short-term volatility. And altcoins are desperate for a reason to believe the next phase is not just another failed bounce. Regulation will not fix everything overnight, but it can change the backdrop. If the United States finally gives crypto a workable market structure, that would be one of the most important long-term developments for the industry. It would tell institutions that crypto is no longer being treated like a temporary experiment. It would tell builders there is a pathway forward. It would tell exchanges the rules of the road. And it would tell investors that the market is maturing. That is the real story. The Clarity Act is not exciting because of politics. It is exciting because it could decide who gets to build the next version of finance. Does America lead it? Do banks control it? Do crypto companies shape it? Does DeFi survive it? Do investors finally get cleaner access? Or does the whole thing get delayed again while other countries move faster? That is why this matters. So today's message is simple. Do not ignore regulation just because the chart is red. The price tells you what traders feel today. Regulation tells you what the market may be allowed to become tomorrow. And if crypto is going to move from speculation into real infrastructure, then the Clarity Act, or something like it, is one of the biggest battles still ahead. As always, this is not financial advice. Protect your downside, do your own research, use the Kraken link in the description if you want to support the show, and we will see you at the top.